before we get into some of these outlook areas of what we know, I need to give you some legal stuff, right? And some of that legal stuff is that the past doesn't always reflect the future. This is my personal views, not the views of Waterfind. And also you need to make your own judgment about what might be occurring in the future. So the information that you can get in here, while you might use the Waterfind system as your only information source, some of the information that I'm sharing with you here right now, I get a login which is exactly the same as your login to the Waterfind system. So you can generate these charts and look at this information just like I can. So I'd encourage you to learn how to drive that and use that as one of your information sources, because really I believe it's really one of the premier water market information systems, not only in Australia but in the world. So the historic run of valuation increases of permanent water rights, which started from 2015, has been bigger for high security water rights than it has been for general security water rights, but both have shared a run in capital improvement. So over 200% over that period of time for high security water rights and over 100% for general security water rights. But the peak of the market that's occurred this season was reached earlier on in the season for general security water rights than it appears to be for high security permanent water rights. What's been driving these turnaround from these peaks of our permanent water entitlement values this season? I believe, and my personal view, is that these are different for general security water than they are for high security water. So for general security water, what we really saw was almost like an exhaustion effect, where just had not been receiving allocations or receiving very low allocations in the Murrumbidgee, for instance, for yet another year. And there was a lot of capital tied up in those permanent water rights. And also those farmers wanted to look at, well, is there a better way that they can actually put that capital to work? So we saw more interest in actually people coming in to sell water, and that greater interest in permanent water rights and general security water sales that are occurring sort of turned that market around. What we saw in high security water rights, and that was really the driver for general security. For high security water rights, the driver's more been the change in rainfall, the change in outlook conditions, some of the wetter conditions coming through, and also some of the changes which are occurring at the moment with general economic confidence as a result of COVID-19. And the high security water rights, we've got to remember, have been driven, those values have been heavily driven by water investors, and some of the confidence in water investors continuing to have funds to deploy on behalf of their stakeholders has been shocked somewhat with COVID-19. I believe it has. And we're seeing sort of a lower demand for some of those water rights, which has meant then that there's been sort of more demand driven than supply driven. So the devaluations or the peak of the market that we saw for general security water rights was more of a supply driven turnaround where we had more water coming to the market. And the high security water rights, it's been more of a demand driven turnaround. So less demand for those water rights. Over the last 15 years, and since we've recorded electronically water data, the correlation between the available allocations and the average value of temporary water has remained strong. And that really is that the higher the allocations, the lower the temporary price. The lower the allocations, the higher the temporary price. If that statistic remains and plays itself out again next year, we're likely to see a decrease in temporary water prices as a result of an increase in allocations. To what extent? When we look at the current average price against all weighted markets in the Murray-Darling Basin over the 19-20 irrigation season, and I know there's been some times it's been lower than this and higher than this, but it's sitting around the $500 per megalitre mark. When we look at that 16-17 season and the seasons either side of it, temporary water prices have been around the $64 to $174 per megalitre in the average prices in that area. So we're kind of looking at a decrease in average prices. If it continues, that decrease in average prices could be more than half of the current average. It could be around the $200 mark on average for the whole season, but that might mean there's months that will trade higher than that, months that will trade lower than that. Or it could be if allocations are stronger than we expect at 9 million megalitres, it could be even lower than that. So what we do know in the past that there's been this very strong correlation with allocations and pricing. That continues, we are likely to see lower temporary prices. So if I was a farmer, which I used to be, what would I be doing? I'd be preparing for a wetter than average season, an improvement in allocations, the potential for lower temporary water prices next year than you experienced this year, and preparing ground for a program. So of course, this is your call about what you do. I don't run your business, but I'd be keeping a close eye on some of the information that's available to it. The charts that you've seen here, which I've been using to look at next season, are available on your Waterfind login. So use your Waterfind login, learn how to use those charts, get proficient and efficient with looking at those. Don't use that as your only information source. Look at the state water planning data that's coming through, the rockets as well. But certainly get over the Water Market Information Centre, because you can get the same access to the charts that you've been seeing here that I use to look at next season. So thanks for your interest. Keep growing.